All right, good morning. In the later part of the briefing yesterday, I mentioned that we were setting up for one of those reversal days where we would have this move down, set a deep wick, and rally back up. I didn't know if it was going to happen or not, but I pointed it out because we had the setup for it. Now, you don't really see the gap on this chart, but we'll get to it on the SPX, and it's perfect. It's a gap down, deep wick, rally back up. We didn't end in a bullish Marbozu, so we didn't end at the very high of the day. But yeah, nice follow through. Let's start with Asia. They tried an inside day breakout and failed. It's like a spinning top, perhaps. Definitely a reversal candle. Europe is still open. So far, failed the inside day breakout, and it's a really, really small candle compared to everything that we've been seeing over in Europe, say, for the last week. Now the day is only half done. It's 12:30 over there, so they got room, they got time to expand, but for the time being, that's a really compressed candle. Energy still where energy was. Surprise, not really. Same old on that one. So we got a lot of Fed speakers today. Logan Bosick again, and I'm not sure on this one if he's going to talk today because he ended up talking yesterday. He ended up flipping this market over yesterday. That's what lit the fuse. But we've got Logan and Bosick, rig count, and then Bowman. So we've got a lot of Fed speakers and Barkin later in the day. ISM is going to be a really big deal, and the PMIs. So you can see the high impact on the 10 a.m. ISM is a biggie, but just because it shows PMI is not as elevated, in this threat assessment gauge, light yellow, orange, and red, I would put PMI in the red today. Yeah. Yep. Yeah, I'm not logged in. So 11, 12, 2, and 4:45. ISM at 10, PMI at 9:45. Now the rig count at 1 o'clock, it really shouldn't be anything. 9 times out of 10, the number of rigs don't change enough to rock the boat. Maybe 1 or 2 rigs up, 1 or 2 rigs down, nothing really extreme. That doesn't mean that it can't happen, right? Obviously, it's happened before, it will happen again. But most of the time, unless there's some big service recall on a new fleet that just come out, there's not going to be anything really that changes on that front. gap down with a wick and a rally, breakthrough previous high. Simple, effective. Look at it on regular data. You can see where we were really struggling to even get back up and close the gap. And then Bostic come out chipping teeth, and bada bing, bada boom. We did the thing. And apparently the algos misread what Bostic was saying. Took him as dovish rather than hawkish, and popped us to the upside. Volume is within line, curiously too, because of the ISM and the numbers, the econ that we have on deck. You would kind of assume we'd be a little light in the volume today, and we're not. So they're not willing to wait. They see no reason to hold back. We had a reasonably narrow IB in the overnight hours, holding pretty tight until 3 o'clock. And then we woke up with a vengeance. Inside day breakout at this point to the upside. 39.95 is the line in the sand. We're still right underneath that weekly pivot point. But if we get above this, that's a check mark for swing longs. Now, the thing is about saying that is we've got a whole lot of indicators out there that say a swing long right now is a really bad idea. But everybody's time frame is different. So on all of those indicators that say a swing long is a bad idea, it's using like a 8-week plus 8-week kind of swing. If our swing is more of a 2 to 3 week thing, then we could still be swing long while that other indicator or all those other indicators are saying don't swing long yet. And they're looking at, a bigger picture, a more sustainable trend. We have a market maker move this morning. Seems like the first one this week for the ES. I could be wrong on that, but I don't think so. I don't think we've had a market maker move this week. We did just tweezer top there, by the way, on the 15. So likely we're going to pause here for a little bit until we get some econ. We have an MDP this morning. That's a missed daily pivot. Here's the daily pivot. And we haven't hit it. It's really that simple. It doesn't have to be any more complex than that. 80% of the time or more, a stock will hit its daily pivot. Which means when we don't hit it, we're in this 20th percentile, right? We're in this small window of what rarely happens. There's a strategy that goes to that. I don't trade the strategy, but it's worth learning it just to kind of understand how you can use it to evaluate the market and its environment and conditions. We've nearly got a classic B shape 10-day, 30-minute volume profile. It's not perfect, but I really don't think we're, perfect is an attainable goal. It's kind of shallow over here. And then we've got the clear, very solid point of control, classic B. If we get above 40.30, the cog line at 40.30 or 40.31, it's a smooth shot. Shallow area should be able to move through it relatively quickly, just like we did on the way down. So 40.31 is the line in the sand. You could make it 40.34 based on this pivot point from back yonder, but there's no reason to squabble on this. It's a little bit of a zone. If you can get through that zone, get that breakout, the move back through should be relatively easier. This is the SPY. Notice, even though the numbers aren't the same, it's not, 40.31. You can look back to the same pivot point on that same day. 402.17, 402. Shallow area, classic B shape. So the numbers don't have to match. The picture just has to match. It's like playing mahjong. We do have this really wide, disgusting looking, flattened inverse head and shoulders. And the thing about classic patterns is the uglier they are, the least effective they are. Usually because the uglier they are, the harder it is for everybody to see it. And then it becomes a little bit of the chicken and the egg. Did it work because everybody's seen it? Or did it work because, well, it was a head and shoulders and that's what happens next? I don't have an answer for that, by the way. But when they're really ugly and nobody can really see it, nobody really trades it. Makes perfect sense. It is an inverse head and shoulders at the bottom of a range. So it is, it's showing up where it should, not sitting in the middle of the range somewhere. If we were to define a neckline break, you're looking at 40-45 for 100% of the move, and 40-15 for 50% of the move. That's all that it owes us. All right, mapping out the 5x5. We have a new VPOC below us. $39.46-ish. That's pretty close. No reason to split hairs. Should we go to the downside today and break through our own Globex low, that's going to be the target first. And it would make sense too, with all of this shallow area here, that we would fall through it really quick to get to that POC. We can see next week's expected move range already, but it doesn't count yet. It only counts after the close today. Already we can distinguish that it's a lot wider than the week that we just came in, that we just resolved through. Notice we're still in the box, by the way. We didn't get out of the box this week. Yay. When we're trying to define how accurate the market makers are right now with their ability to identify volatility, one of the things that we can do is count back how many weeks in the last 10 weeks did we close outside the box at the end of the week. This week so far, knock on wood, we're going to close in the box. Last week was a fail. The week before that was good. And the week before that. So 1 out of 4 so far. Just barely, but it counts. We closed that week. This is questionable. And we made that week. Again, this one's questionable. On these questionable ones, this is why we run butterflies on the edge of the expected move. 1, butterflies are crazy cheap. 2, I know we're not on the SPX, but I'll say the words. The SPX pins on one of these lines way more than it should statistically. Way more. It should show up as 8 or 7 out of 10 times we're closing inside the box. That's the number. 7 is normal. That's a 1 standard deviation. 8 would be above the norm. And the SPX usually stays above the norm. It usually runs an 80%. So when it starts getting below 70, they're getting it wrong, or volatility is really picking up and screwing things up. And that's usually a warning. If you look at February of 2020, sound familiar? It was right before COVID. We were topping out all-time highs in the market. And what had happened? Count the last 10 weeks before we fell. How many times we started breaking outside of that box before all hell broke loose and we crashed and burned. And the warning was there. We started to fail outside of the box before COVID, multiple times in those 10 weeks. Bum, bum, bum. All right, we're nearly back inside the box. That tweezer top did the trick. It's very likely we're going to end the week just kind of chopping about here, sitting on the weekly chart. Just take a look at it. We still have that line in the sand that I've talked about all week. It's the 50% mark, 40.18. Now, if we close below 40.18, we're going to consider everything still bearish, right? Because we have to get back above that level. If we close below the weekly pivot point, we're going to consider everything still bearish because, well, we have to get above that level. All right, Bitcoin is really down this morning, 4.8%. Nat gas getting closer to being up 2% today. TLT is up. Nice to see that Save-A-Ho and the bonds came through, and gold is up, implying that US dollar Japan is down. Everything else is barely up. So Baidu more than 1.25, but Baba nothing, JD nothing. We're not seeing the KWeb constituents really popping off today. They're basically flat, which makes sense looking at you know, how I started the morning briefing and we looked at Asia and it had that inside day breakout failure. So Billy and Baidu, it's not enough. So we got a TRB set up in Costco, but looking at the pre-market this morning at 173, that would put us down here. So a significant breakdown. It breaks this bigger pattern that we'd been kind of focused on, and right now 440 or 450 area is going to be the focus. Maybe a little bit of this gap. So the thing about this setup this morning is with the recovery from yesterday, we really don't have, say, a strong grasp of what the follow through is going to be today. When Bostic came out and flipped those algos over, it kind of broke the system, the narrative that we've been running. So now on the follow through, there's this big what if, should we stick with the follow through or not? And if not, then what do we do with it? So with Google, for an example, this morning, so we had that big pop up yesterday, and we're up to the top of this structure. If we continue to make a push for it today, getting this gap close will be the focus. $94, 70, 72, something like that. 94.59 be the gap close. I know that seems like a long ways off, but with with an ADR of nearly 3% and a market maker move today of another 1.6, it can make it. They basically all have this same setup right now. 254.77 will be the target on Microsoft. The thing is, with this big data coming out or sitting on the table today, this econ that's on deck, it's very possible that everything just gets resolved at 9:45 or maybe 10 o'clock. Which would be nice, right? We get some clear, convincing data. The market sets its spurs and resolves the darn thing, just gets it done. And we get out of this wishy-washy sort of maybe kind of hope it works place. Right now it says we could make a 2% move today. So from the close, or let's just go from the ADR high. $40.63 is what that gives us to the upside. That's taking a 1.5 ADR and adding on a 0.5 market maker move, 2% move. Now that's not bad. If things were to get out of control, we would definitely move farther than that, right? Like that's not a big deal. 2% is nothing. To the other side, if things were to start getting nasty, 3,900. So right down to the roundy. Keep in mind, if we get to that 2% today, you're going to want to add another 0.5%, mark out a 2.5, and then mark out a 3, right? So we've measured 1.5, which is what the ADR yellow line is. 3,900 would be 2%. Go from that and add another 0.5%. Because the S&P, it can move 3% in a day, no problem. It's done it before. It will do it again. I don't think today's got those kind of fireworks built into it, but it doesn't mean that it can't. And I've got this sneaky suspicion that we're going to see some violence and some volatility. We kind of shake, rock, roll, and then we end the week right where we are without really getting any clear answers. I'm okay with that too. One thing that's curious, when we were coming into CPI data and everybody was saying how bad it was going to be, like, oh my gosh, it's CPI, it's going to be this really big move, and we got nothing. One of the reasons we got nothing was because everybody thought it was going to be really big. They all priced for really big. They were all covered. They were all hedged. Nobody's saying boo about the econ on deck. Is it going to be big? Is the miss going to be important? You know, are they expecting a real serious shift in market structure? Haven't heard any of it. Nothing's come down the pipe like that, which means we do have the capacity for a really big move today, since nobody's been talking about how big the move is likely going to be if we miss. Otherwise, we got our head and shoulders. We've got a TRB, and we have our 50% line in the sand at 40.18. That's what you really want to focus on today, is that line in the sand. If we close above it, the bullish bent is not done. We could still at least retest this upper zone up here. If we can't get above that 40.18 this week, then we have the capacity to stay in this box for another week and or leg down. Into this old zone back here. And keep in mind all those Fed speakers this afternoon. So if price does start to get out of line to the upside, remember, they don't want a market ripping to the upside. If it really starts getting out of control to the upside, they could come in and whack it back down. And Bosick yesterday was misinterpreted and caused this spike up. If he's going to be speaking today, and it says he is, he might want to come in and correct that and, you know, restate what he said yesterday in a way that the algos don't misunderstand. Kind of implies that he could come in swinging a hammer, knocking this market down a little bit. It's something that we certainly have to consider. Everybody, enjoy your weekend. Be careful, be safe, watch the clock. I'll see y'all on Monday.